Well, good morning. Yes, it's me, Kenny Polcari, your host of the party. And today is Halloween, Friday, October 31st, 2025. And here are the things you need to know to get your day started. Well, Thursday was a little bit of a hangover. You can blame Meta squarely on what happened. And the Hindenburg Omen, well, it flashes a signal. Investors are not panicking, they're preparing. Now, bonds are down, sending yields up a little bit. Oil was flat, and gold continues to churn around 4,000. And what do we have at dinner tonight? We're going to have the Frittata di Patate, delicious classic Italian dish. Now, Wednesday brought us the Fed announcement and earnings from three of the MAG-7 superstars, right? And then Thursday, well, that delivered the reaction. Investors, traders, and algos had the night to sleep on JJ's tone, what he said, and how he said it, and also to digest the earnings from Meta, Microsoft, and Google. By morning, the verdict was in. Stocks had gotten maybe a little bit ahead of themselves, so it was time to ring the cash register. Futures were soft ahead of the opening yesterday, and once the bell rang, the algos went into sell mode, dragging stocks down all day. By the end of the day, 8 of the 11 S&P sectors ended in the red. Now, Meta, well, that was the clear culprit. It plunged 11% as earnings and investors, after the earnings report, as investors started to question those rising expenses. Do those billion-dollar pay packages concern anyone? AI spending and a softer ad revenue outlook was also partly to blame. The move alone set the tone for the day and sent tremors through the rest of big tech. Microsoft, that lost 3% as investors questioned growth momentum and cloud margins, while Google, well, they managed to buck the trend and closed higher on solid search and AI demand. Apple yesterday ended unchanged. AMZN was down a little bit ahead of their reports, and Nvidia slipped as profit-taking hit the chip space. In the end, almost anything tech was being sold hard. Buyers just stepping aside, waiting to take advantage. Now, the XLK lost 1.2%. ARK lost 4%. The SOX was down 1.3%. The BOTS was down 2%. And ARK Web, ARKW, was down 4%. Is anyone seeing a pattern here? Now, yesterday, the Dow ended up giving up 110 points. The S&P was down 68. The NASDAQ fell 378. The Russell lost 18 points. The Transport so bucked the trend and rose 142 points. The equal-weighted S&P gave up 30 points. While the MAG-7 took it on the chin, giving up 945 points, or nearly 3%. And that makes sense, doesn't it? Yes, it does. It wasn't a disaster, just traders and algos reacting to the headlines, because that's what they do. They react to every headline. Long-term investors, they react only to the key headlines before making dramatic changes. In fact, long-term investors were likely the buyers yesterday in names that got whacked. Think tech. Now, about the divergence, right? Does the Hindenburg Omen mean anything to you? Well, recall we've been talking about the divergence between the S&P 500 and the equal-weight S&P. The headline index keeps advancing thanks to the outsized contribution of the MAG-7, while the equal-weighted version has been quietly drifting lower. And that's been a little bit of a concern. We've talked about it. Yesterday, we got another technical signal that caught some attention. And to be fair, it is controversial, so take it with a grain of salt, and it's called the Hindenburg Omen. Now, the omen gets triggered and flashes a warning signal that the market could be setting up for a significant decline within the next 2 or 3 months, right? Which, by the way, lands us right into January 2026, which is the new year, a new quarter, and maybe a new tone for the markets. And let's be clear, I don't necessarily think stocks are going to correct significantly before the end of the year. But January 1st, that is another story because it is a new year. Now, here's what the omen requires. A large number of stocks have to be hitting 52-week highs. At the same time, a large number have to be hitting 52-week lows. The overall market still has to be trending higher, which it is. And the oscillator, the McClellan oscillator, which is a measure of market breadth, needs to be turning negative. Now, when all this happens together, it signals an unhealthy breadth in the market. Momentum is waning even as the index is climbing. Now, is it perfect? Absolutely not. The Hindenburg Omen has a long history of false alarms, so don't go light your hair on fire. But it is worth noting because it speaks to the growing fragility beneath the surface, and you'll hear probably some analysts talking about it today. So what's it mean for the investor? It means you don't panic. You just stay prepared. When you see technical warnings like these, coupled with narrowing breadth and market exhaustion, it's kind of flashing like a yellow light. Proceed with caution. We've been talking about that, right? And that's exactly what I've been saying all along, that there's no need to chase the names that are already extended. If you own them, that's great. You're participating. And if you don't, yesterday was a good day to start to dip your toes in the water. In the end, it's about managing your risk, knowing who you are and where you are in the life cycle. Trim the names that maybe have run too far, raise a little bit of cash around the edges, or better yet, just add to the underperformers to help you rebalance, right? Because it's all about discipline. Now, watch for the rotation. So watch for value names, dividend payers, cyclicals, and names with big quality balance sheets tend to attract attention when growth gets stretched and the market gets nervous, right? Themes that, again, we've been talking about. You want to stay long with a bull market mentality, but recognize that there are short-term risks that create opportunities. Now, what it doesn't mean is that you sell everything and you go into CDs or treasuries. No. Stay aware of where we are in the cycle so you're not surprised when the volatility hits and that you stand ready to scoop up those good stocks when they go on sale. Now, here's the rest of the story. The VIX is not sounding any alarms at the moment. It's still hugging the trend line at very calm levels. But we know how quickly that can change. It ended unchanged yesterday, and this morning it's down 4%. Why? Because NASDAQ futures are trending higher. The NASDAQ, which got beaten up yesterday, is up nearly 1.3% in the pre-market. Thanks to what? Apple, up 1.8%, and Amazon, up 12% after reporting strong results. Bonds continue to get sold. The TLT down 0.6, the TLH down 0.4, the AG is down 0.2, the 10-year yield is down 4.1%, and the 30 is at 4.66. Gold, well, they found dip buyers again yesterday. They took it up 2.4% or $95 an ounce to close at $4,024. This morning, it's stabilizing around $4,000, which is short-term support. The broader trend line support sits down at $38.20. Not out of the question, depending on how the paparazzi, right, the Fed speakers, talk over the next couple of weeks about what they think about a December rate cut or not. Oil continues to consolidate around $60, right? It's still remaining in that 55, 62 range. This morning, futures are mixed. The NASDAQ is up 300, the S&P up 48, the Dow is up 35, and the Russell's down 5. The excitement is all about Apple and Amazon. Neither disappointed, and investors are loving it. Amazon blew the roof off, reporting the fastest cloud unit growth in nearly 3 years, setting that stock up 12.7%, adding roughly $300 billion in market cap before the opening. Apple rose 1.8% on a revenue beat and optimism, certainly around the Christmas holiday sales. It's Friday after a big week of earnings. Today we're going to get just a handful, but Chevron and ExxonMobil will be in focus. Chevron beat and is up 0.6% in the pre-market. Exxon is down 0.4 ahead of their report. European markets are mostly lower except for the mother country, Italy. They're up 0.4%. The UK's down 0.5%, Germany's down 0.5%, France is down 0.3%, Spain is down 0.2%. The ECB economy grew by 0.2% in the third quarter, slightly beating the estimates, and they held rates steady for the third meeting in a row. The SP closed at 68.22, down 68 points, right on the low of the day. This morning's action suggests some divergence. Keep an eye on the S&P versus the equal weight. That's where you're going to see what's really happening under the sheets. So now, here's the countdown. 31 days of a government shutdown, and it's getting hot in here because there's no end in sight. 29 days till official Black Friday, 55 days till Christmas, and 61 days until the ball drops in Times Square. It's all about reviewing your plan. Give me a call for a complimentary, free, no obligation portfolio analysis. You can get me at 561-931-0190. Okay, so for dinner tonight, we're going to have this classic Frittata di Patate. It's a potato frittata. Very simple to make, but it's classic feel-good food. For this, you need peeled and cubed potatoes. You need eggs, Parmigiana cheese, fresh grated, olive oil, salt and pepper, and maybe a little bit of butter, because butter's always good. Begin by heating up some olive oil and butter in a large saute pan, then add in the cubed cut up potatoes, enough to cover the bottom of the pan. Season them with salt and pepper. Let them cook for 15 to 20 minutes until the potatoes begin to take on some color around the edges, right? Make sure to keep mixing them so that they cook all over and they don't burn. When the potatoes are cooking, you want to crack 6 eggs into a bowl. Season those with salt and pepper. Beat the eggs. Now add in a handful of 2 of fresh grated Parmigiana cheese and then mix it really well. Now, when the potatoes are ready, spread them out all evenly on the bottom of the pan. Put the heat down to low. Pour the egg mixture right in so that it spreads all throughout the pan. Cover it and cook it 5 to 8 minutes on low. Remove the top. Check, are the eggs firm on top? If not, cook for a little bit longer. If they are, then you're going to carefully shake the pan from side to side just to make sure that it's not sticking. And then carefully slide the frittata onto a plate. Now take your saute pan, put it on top, flip the plate over so that the frittata, now that the top is on the bottom, put it back on the stove for 3 or 4 minutes because you want the top now to get all nice and golden color. Once it's done, take it off, slide it back onto that plate, cut it up like a pizza, and then you serve it. It is great any time of the day. You can have it for breakfast. You can have it for lunch. You can have it for dinner. You can have it as a side dish. You can put it in between Italian bread and have a sandwich. It is just delicious. And always have it with a big glass of ice cold milk. That's always the best. Look, it is Friday. The weekend's here. I'll be in New York from Saturday till Tuesday. I'll be joining the Big Money Show on Tuesday. And this morning, I'm joining Stuart Varney at 9 o'clock. It's actually David Asman sitting in for Stuart Varney, so make sure you tune in. Until then, take good care.